TD just came out and said real estate is going to correct another 10% from now to Q2 of 2024. Is this true? And what does it mean for you if you're a homeowner or a renter? Now, a lot of people want real estate to crash so that it becomes more affordable. Now, are we finally gonna get that? Let's break this down. All right, so TD, Toronto Dominion, predicted in September of 2023 that real estate was likely going to fall another 5% from now until Q2 of 2024 when it's most likely, everybody fucking knows it, Bank of Canada is going to start cutting rates. But they recently revised that and said, nah, we actually think it's going to fall about 10%. So let's dissect this because these types of articles are really confusing for the average Joe. But on this channel, we take the sophisticated investor approach. We look at all the live data. We peel the onion about what these articles are actually saying, what they're not saying, and we think about it like a professional real estate investor. And no, before you think I'm some other fucking finance YouTube boy, let me get this straight. Okay, this channel is not like the other ones. Why? I've actually bought and sold over 150 properties. I got a business of 13 employees where we flip real estate. I've raised over $60 million from total strangers who believe in me and wanted to invest with me. And I can retire literally like 5 times over by the age of 35 right now. So no, I ain't no fucking finance boy. You know who those guys are. I'm not going to say the names, but you know who those guys are. You can go follow them for their edutainment. Over here, we're running a real fucking business. So number one, this article is talking about the average Canadian price. Average Canadian homes are about to fall, predicted 10% more from now to Q2. Big mistake here, or big little caveat for you, the sophisticated investor reading this article, unlike the peasants. Now, when someone says average Canadian home, right away, this fucking thing is garbage. There's no such thing as an average Canadian price. There's not even a such thing as an average Ontario price. There is not even a such thing really as an average Kitchener-Waterloo price. Real estate is very, very local, and in certain areas, it's even neighborhood specific. So whenever you hear the average Canadian price, the average real estate price, take it with an enormous grain of salt, most likely bullshit. For example, the average Canadian price, we're taking properties from fucking Saskatoon, Buckadoon, no place, nowhere, Saskatoon. I don't know what the fuck that was, but we're going to Saskatoon. We're taking Calgary's prices, Edmonton, Victoria, BC, fucking St. John, Halifax, Kitchener-Waterloo, GTA, and we're just compiling all of them and finding you can't do that. That's garbage. And as we always talk about on this channel, our price is going to fall likely from now to Q2. Yeah, they're probably going to come down. But like I said, almost everybody in the industry, in the real estate industry, knows interest rate cuts are just around the corner. We're talking 3 to 6 months. The Bank of Canada's already admitted. They're saying spring, okay? End of spring. A lot of us who are reading the data, looking at the bond market specifically, looking at the price of oil, the price of gas, the price of commodities, the price of inflation likely to roll over, we're all going, yeah, end of spring, okay, bullshit. We've had 0 GDP for the entire year. It's going to be confirmed in January, February that we've been in a recession the entire year. But you're going to tell me Tiff McClellan is going to sit there and go, let's keep holding those rates till June. Bullshit. But anyway, even if we do hold rates until May, June, like I said, we're literally 5-6 months away. Okay? Everybody knows what's coming with, and when those cuts happen, what do you think's going to happen? What do you think's going to happen when the first cut happens? It's going to be fucking pandemonium. It's going to be like zombies running down the street. Home buyers are going to come out of the woodwork and start running to buy real estate again. You think prices are going to go down and keep going down? How? It's not going to happen. So will prices dip from now until then? Probably. Will they dip more in fucking Saskatoon, Magoon? Probably, because who the fuck cares about Saskatoon? Who wants to live there? Is it going to go down in Sudbury, Ontario? Thunder Bay, Ontario? Fucking buckfuck nowhere? Probably. No jobs there, no population growth, no GDP. Of course, those areas, I could see those areas going down 10%. But Hamilton, Kitchener-Waterloo, London, Ontario, GTA... Probably not. Why? They're resilient. There's jobs there. Everybody wants to live there. And sellers are doing this. I'm now lowering my price. That's what sellers are doing. All the realtors are telling the sellers because they're the industry professionals. Yes, a lot of them suck, but they're all getting the same info I am because they're in the business. That's their fucking livelihood. They're telling all the sellers, yo, Don't be discounting your properties unless you really have to. Now, some people have to sell. That's the thing. And that's what you're seeing in all the articles and on the news. This guy sold and lost 300 grand. Yeah, he probably had to sell. Divorce, death, job change, things happen in life where you got to sell. But the vast majority of sellers who want to sell, lots of people want to sell and get the next home, keep up with the Joneses, they're bored of this home, whatever. Lots of people want to sell, but those sellers, they're not selling at a discount. Why would they? Their home was worth 250 grand more 12 months ago, and they know that. You think they're going to take that loss? They're still ahead because they bought probably 10 years ago. You think they're going to take that loss of 200K tax-free money? Because in Canada, when you sell your primary residence, that money just goes, thank you very much, right in your pocket, no taxes. You think someone's going to eat that? No. They're going, give me my price, or I'm going to wait till April or May because I know what's coming. My realtor's telling me. I'm following the news. The Bank of Canada already said they're going to cut rates. I know what's coming. They're not selling their house at a fucking discount. The vast majority of sellers are saying, fuck you. In fact, even for myself, I got a couple flips on the market right now, and our flips fucking rock. These houses are tip top to bottom. They look fucking dope. And I got buyers going through all day right now. I get showings every single day, and they're going,
my buyers like the house. Would you take an offer of 600 grand?
And my house is listed at 750. The market's just crazy right now. The realtor's trying to be a realtor to get the deal done. I get it. You know what I'm saying? Fuck you, pussy. I'm waiting till April, bitch. I know what's coming. Either pay 750 or get the fuck on. And that's what every seller's doing in the big cities. Kitchener-Waterloo, Hamilton, London, GTA. Now, sellers in Thunder Bay, buttfuck Saskatoon, they're getting their ass kicked. Nobody wants to live there. There's no competition. Nobody wants to buy your house. So I get that those areas are kind of skewing the numbers. You're seeing the articles of all that stuff. I get it. But in reality, we know where this is going. And again, average Canadian price, to get my big point around, to come back to this, horseshit. Number 2, bond yields. This article from TD says they revised it from 5% to 10% correction because bond yields have been higher than expected. I don't know when this article was written because literally in the past 30 days, bond yields are dropping like a rock, which means fixed rate mortgages are coming down. Yeah. Let me repeat that in case you're stuck in the doom and gloom news. Yeah, the variable Bank of Canada rate is not coming down, not yet. They're holding strong like a big tough guy, Tiff McClem. But fixed rate mortgages don't care about Tiff McClem. Fixed rate mortgages are based on the bond market. And when bond yields start to go down, and first off, why are they going down? Because big, large investors, corporations are saying the GIF is up. Is that the right word? I don't know. The game is up. We know inflation's coming over. The last report just came out last week. Inflation's at 3.1%. Next month, I guarantee we're going to be in the twos. We're in the twos. Okay? Inflation is sticky. What are you talking about, sticky? We're going to be in the twos next month. By January, in the mid twos. By February, likely in the low twos. Time to cut. Anyway, the big bond investors, the big corporations, they know this. And you make money in bonds when they go down. Unlike the stock market. Stock market goes up, you make money. In bonds, you want to buy here and have them go down and sell here. It's hard to explain it in this video. I explain it in lots of my videos, but the bond market is flip-flopped from the stock market. So you want to buy high and sell low. Now, all these big investors, which is the majority of people who invest in bonds, are giant, sophisticated hedge funds. Not you and me. We don't really buy bonds. Big corporations buy bonds, and they're sophisticated. They're smart, and they're going, we see the writing on the wall. We know what's coming. Inflation's going to roll over like a rock. Tiff McClem's going to roll over like a bitch soon and lower those rates. It's time to buy those bonds. And what happens when lots of people buy bonds? The prices come down. The yields come down. Why? More people are coming in. So the Bank of Canada, the federal government can go, why am I going to offer my bond prices up here? More people are buying them. I'm going to lower the prices. And as more people buy them, I'm going to lower the prices. It's kind of supply and demand in the inverse. If everybody wants my shit, I can offer my loans essentially for a lower price. And people are still going to buy them. So why would I pay them a higher premium? I'm going to pay them a lower premium. And that's what's happening. That's why bond yields are coming down. More people are starting to buy them because more people see the writing on the wall. And what happens when bond yields go down? Fixed rate mortgages go down. And fixed rate mortgages are always a precursor for variables going down. So if fixed rate mortgages are going down, we know it's not too far off that Bank of Canada is going to lower their variable rates soon. The writing's on the wall, but the average Joes reading CTV, CCTV, CNN, they don't see it. They just see fear. the housing market. The sophisticated investor are going, excellent. I see exactly what's coming. These pussies don't. They're peasants. I'm going to do my thing. That's what's happening. So going back to my TD, when the fuck did they write this article? Because in the past 30 days, bond yields are dropping like a rock. So where's this bond yields are higher for longer we see, which is going to raise mortgages, which I don't know. Now, the next thing I want to say is that prices coming down in real estate, like everybody's hoping real estate crashes. Prices coming down doesn't necessarily mean more affordable. And that's what people want. When people say, I want real estate to crash, it's too high, I can't buy, why can't prices just crash? What they really mean to say is, I want real estate to be more affordable so I can buy a home. Careful what you wish for. See, because when houses were in Kitchener-Waterloo, a detached house was $1 million in the hype of the hype, February 22, but when interest rates were 1%, right? That $1 million house with a 1% rate is more affordable than the same house today, the same detached house with a garage, 3-bed, 2-bath, whatever, that same house at $750,000, yeah, it came down $250,000, good call, but interest rates are 5.5%. That house is more expensive on a monthly basis than the $1 million house at a 1% rate. So careful what you wish for. Most people, I think, would rather a basic economy. Not too crazy, not too high. Interest rates probably about 3.5%, 4%. And as I've said before, as a real estate investor, even as someone who has a vested interest in making money in the craziness, I'd like to see real estate go back to a 3.5%, 4% interest rate. It's nice and boring. The haves can get in. The poor class who shouldn't ever be buying houses, that they're not stable, they don't have good jobs, they just work at fucking Tim Hortons. Okay, they shouldn't be buying homes anyway. So it's a nice medium. The people who should be buying should, people who shouldn't, cool. And Joe Blow working 20 hours a week at an auto shop is buying $1 million home. Okay, so when rates do go up, he's getting his ass kicked. So let's go back to a nice boring market. I think most people would like that. So again, careful what you wish for when you say, I want price to come down, because what does that mean? It means interest rates got to be high, inflation's probably high, we're tiptoeing on an economic recession. Okay, we don't want prices to crash down. We want them to mediate down, or what we really want is to stay flat and just mediate up. Nice and slow, nice and boring, Goldilocks. That's what we want. And that's what we're going back to most likely. Once those rates come down, we're most likely going to go back to a position of 3.5%, 4% interest rates. I hope. But that's the goal that Tiff McClellan, Bank of Canada, is saying. He said, hey, dude, we ain't ever going back to fucking 1% interest rates. We learned our lesson. That's dumb. We ain't doing that again. So let's just hope we go back there. Most people will be happy with that. So last but not least, to finish off this video, what should you do? First and foremost, learn about money and how the money markets work. Learn about economics. Learn how to peel the onion behind these types of articles, which is all we do on this channel. Every single day we release a video breaking down what's going on, what I'm seeing in the market, what I'm doing with my business, peeling the onion on these types of articles and going, what do they really mean? What are they actually saying in this article? What does Tiff McClellan actually mean when he says this, this, and this? You need to be more sophisticated and take a more investor approach when you're reading news, when you're investing in the stock market or real estate, whatever you're doing. It's got to be at a higher level, not a Joe Blow level, and certainly not investing on your gut feeling. Oh, I got a feeling real estate's gonna crash 40%, dude. Illuminati, dude. Real estate fucking... Yeah, dude, I love conspiracies, all right? On my arm, if I could pull my shirt up, this shirt won't pull up. You're going to see the truth is out there, tattooed on my fucking arm, dude, because I love conspiracy theories. However, that's for fun, dude. That's for fun. I like to think about aliens. That's cool. But am I investing on this fucking gut feeling of all these weird... Dude. I'm a capitalist, first and foremost, okay? Okay? So I'm investing with a capitalist view. Why? That's how the world runs. Okay, so I'm going to learn how to play the fucking game, how to play the matrix, and on my off time from all the money I'm receiving, I'll play with the aliens. I'll learn about this. I'll learn about that. I'll look into the flat earth theory for fun, okay? But I ain't living my life and investing based on the flat earth theory. Anyway, I'll see you in the next video.